We continue to get more hawkish Fed speak, really contradicting perhaps some of this more benign inflation numbers that we're getting from the U.S. How would your strategy of going into global fixed income help?
Well, basically, if you look at the yield levels that are on offer for global fixed income, they're actually at a 12-year high, around a 12-year high. So basically, if you think about it, if the Fed does over-tighten, growth slows more than expected, then fixed income is a very good place to be because of the yields on offer. And we believe that if the US 10-year yield goes to around the 3% or 3.25% level, then it is a pretty good opportunity for investors to be rotating some of their equities holdings into fixed income.
Where does that put Asian assets, given that, of course, a lot of the central banks are not really catching up to what the Federal Reserve is doing, and we're seeing capital outflows already?
Well, I think a few things. Okay, so first of all, global liquidity is getting tighter because of all the rate hike. So you will be seeing money flowing from one equity region to another quite often. And it seems that right now, money is in US equities, but you can see that S&P 500 did break above 4,200 key resistance level, but it's hovering around there. So you could see that there could be some rotation of money out from the US equities as people basically try to calculate, try to estimate whether the Fed is going to over-tighten or not. If they think they would be, then some of the money could be flowing back to Asia. And you can see that the Chinese authorities, they are still very keen on putting out stimulus on their economies, so that there is some support to Asian equities and Chinese equities at this moment, as we see it.
What do you see as the biggest risk, though? Is it really the PBOC, or potentially are you worried about further downside developments on the geopolitical front here?
I think a few items here. So in terms of China, I think they're going to be continuing to be stimulating. The biggest risk, I think, is really the Fed over-tightening. We do think that the chances of a 75 bips hike is still very much there in September. But what they do in the press conference is what people should be watching out for.
When it comes to the domestic pressure points for China, how closely are you watching what happens with not just the property sector, of course, the missed mortgage payments, but also we're starting to see potentially an overhaul starting of the shadow banking sector as well? Are there systemic risks that we should be worried about?
I think the property sector front, I think, is going to be an ongoing issue. It's not going to be solved overnight. Right. So if you look at most of the fiscal stimulus that the government is putting out for, they are there to replace the lost revenue because in the local government because of this property saga. And we do think that that's going to be continuing in the short term, right? But if you look at the prices in the property bonds and also in the property stocks, a lot of this concern has been priced in. And I think that people need to be watching out for the fact that how much are the asset prices already pricing in the risk there for China property market and also for global assets as a whole.
So what does that mean for what the PBOC and the Chinese government does? Because we continue to get these signals that perhaps they're not going to act as aggressively as many investors had expected.
Okay, so basically the latest inflation print was below expectations, slightly below in China. But the officials are coming out and saying that they are concerned that this could go up even higher. So I think that it is going to be a balancing act between stimulating growth and also not overheightening the inflation worries, right? So what we expect them to do is that they'll probably be taking a more balanced approach. Okay, so the monetary front, they probably will not be able to do as much as they used to do. But on the fiscal stimulus front, we will continue to be seeing them putting out measures, especially areas such as the stimulation of the internal consumption drive, okay? Because they do believe that, right now, if you look at the situation there, internally generating growth is what they feel they are more secure about, right? Given the outside geopolitical tensions that they're seeing.
Where does that put the Chinese yuan as well? Because this chart on the Bloomberg now showing us some of the weakness that we've seen on the US dollar. And we have seen a lot of stability in the Chinese yuan so far. So given the balance of fiscal and monetary policies in China, where does the yuan go from here?
Oh, I think the yuan is probably going to be quite steady around the current levels because if anything, the latest US figure is leading towards the dollar probably capping out from here or even going slightly lower. Okay, because if you think that inflation may be tipping over, then the Fed eventually does not need to hike as much as people were expecting. And you can see that a lot of the other currencies, they are either oversold or their areas need to be tightening the policy as well, such as Europe. So FX is really a zero-sum game, right? So one currency goes up, the other goes down. So, at this moment in time, we think that the dollar is probably going to be, steadying around the current level or even going lower. So that put less pressure on the yuan to depreciate. So yuan is probably going to be steady around here, I think. It's to the government's interest.